or anything you want to ask or say? Nothing? So whatever I want to say, I can say now. You don't
Yes,
want
sir.
to tell anything? All of you are able to submit your assignment?
Yes, sir.
Yeah, you are okay. Others?
Yes,
Yes,
sir.
sir.
Yes, sir.
Some message I received maybe from other class
No,
told they were not able to submit it.
there was error, sir.
Sorry, there are some students not able to submit.
For few days it was, but later we could.
Okay, okay. Office has opened it also, I think. HRM. I'm talking about accounting for managers. Oh, confusion. There are many portals available. I mean, for us too. Yes. LMS as well as another ERP. For accounting for manager also, you have to submit again. I'm telling this is a notification. I will open a link there. This is a notification. This is a notification. Link I will open. Okay, notification is different from link. Notification means telling you to do something or some announcement. I announced. Just now I came to know. I'll open it. Okay, today you submit it there also. Some kind of switching over. So that time you have to little suffer. All right. Anything apart from that in subject? That is assignment. In subject, any doubt? Anybody from online? Any doubt? From the journal, ledger, trial balance, right? That much only you have
Yes.
done.
So did you say we have to upload the assignment again?
Yeah. There are two. What is it? Portal, you'd say? Okay. There are two portals available. One is as usual your LMS that you have done, I think.
Yes.
Another one is one more ERP college has gone for. University has gone for a new ERP. So they are asking us to use that also. Already we are in this LMS. So same thing they are asking us to do there. So nothing. You just take 2 minutes of time. You upload there. That link is not yet opened. I will open it today. You can just upload. Same file you upload.
Okay.
Okay. Same file.
Okay.
Your own same file.
Okay, sir.
Modified one. Because any one I will take and correct it. I can't correct two, right? That's okay. That's only administrative part of it.
Sir,
Yeah.
sir, we have to upload in both the LMS and one more link also, sir, which was
Yes,
ERP.
given.
Yes.
Okay, thank you, sir. Yeah.
Okay, forgot about assignment. Any other doubt in the class? So far we discussed a few concepts. No, any doubt? Assignment was done properly. No doubt in the
Yes.
assignment. No doubt in the assignment. Okay, randomly some questions. Why do we credit capital account when the owner brings money into business? Why do we credit capital account? Am I right? Crediting only, no? Why do we credit capital account when the owner brings money into the business? It's an investment. What concept it is? Sorry? That rule is okay, but what concept is saying it's his own business. Now, why do you account it? It's his
Dual entry
business,
concept.
right? A new entrant is able to tell. You are not able to tell. The concept is called business entity concept. Based on business entity concept only, we are recording it. Otherwise, it's his own business. Why should we record? Because of this concept. Separate entity concept, accounting entity concept, or business entity concept. Entity concept, that's it. Okay. So what's the entry when you draw money from a bank? The business draws money from the bank. What's the entry? Journal entry. Cash account debit to bank account. Okay. Bank account debit to X account. This is an entry. For what transaction this entry should have been passed. Bank account debited to X account. Sorry?
If they have received any payment,
One second.
Received payment from X.
Somebody from online trying to say, let us
received any payment, sir,
received any payment.
Yeah.
From
Received payment from
from
X.
X.
received payment from X.
Yeah.
One second. Received payment from X means cash account debit to X only, no? Why you passed an entry called bank account debit to X?
Check payment has been received from
See,
X.
check payment.
So received a check from
X.
but I am finding no, there is no check received from X. In spite of that also there is an entry called bank account debit to X. What could be the chance?
Maybe credit, sir.
Sorry?
Credit transaction.
Tell the transaction, credit transaction, debit transaction, no problem. Tell the transaction. I agree with you. Check received from X. That is why there is an entry called bank account debit to X account. But I am telling you another point. There is no check received from X at all. In spite of that also, there is an entry called bank to X account. What should have been the transaction for this entry? Sorry? Tell the transaction. You are right. Somebody is telling, no? Online entry. Online transfer. X transfer directly to your account. X has given transfer to your account. You come to know there is a transfer from X to your bank account. That is why bank account debit to X account is there. Okay. Next. Received rupees 20,000 from Mr. X. Received rupees 20,000 from X. Okay. As a loan. That's entry. Received from cash account debit. There is no doubt at all. Cash account debit. Received rupees 20,000. Over. To loan account. To bank account. Why bank is coming here? Why are you traveling bank? Capital. Assuming. Who is investing? What is investing? What do you mean investment? Investing.
Capital.
Capital. When I'm asking something, you are telling another name or another
Unsecured
word.
loan.
What is investing? Investing is a process of committing my resources in favor of someone else by anticipating some compensation in future for that sacrifice. In this case, what I'm doing, I am receiving loan of rupees 20,000 from Mr. X. Is it an investment? Maybe he may think it's an investment. That's not our problem. But for us, he may be an investor. For us also, he may be an investor. But he is not investing in business. We are not giving any stake in the business to him. We have clearly told him, you are an outsider. You are only a loan giver. You are only the creditor. You are only the financier. Irrespective of my business doing good or not, I will pay you interest. And within this number of years, I will pay you back your principal. That's all. You can call that as a capital, no problem. There's nothing wrong in it. You can call
Quasi
it,
capital.
but the capital, what I mean, you can call, and what you understood by the word capital is different. You can call that as a capital, but that capital is a loan capital, debt capital.
Quasi
Capital is
capital.
nothing but total amount invested in the business. If you consider that way, this is a loan capital. It is a debt capital. It is not a capital what you simply assume into your mind. Owner's money. It's not owner's money. But in broader sense, always capital need not to be a owner's money. The total amount invested in the business is called capital. How much amount out of the total amount invested by owner is called owner's capital or equity. We call it as equity. Owner's claim in the business. Net worth of the business. All right. The remaining part, suppose total asset of the company is 1 crore. Owner has given 80 lakhs. Then how the remaining 20 lakhs asset has been created? Owner has contributed only 80 lakhs. But asset is there in the company for 1 crore. How that remaining 20 lakhs has come? Shares. What about the 80 lakhs? 8 lakh only is shares. See, owner's money is nothing but share capital. In the form of company, it is share capital. If it is other form of organization, just a capital. Owner's capital. Owned capital. Equity. Equity is a common term. Don't misunderstand. Equity is only for companies. Equity is there for sole trading organization also. But in company, it is called equity share capital. But here it is called just equity or just capital. Okay. So in that way, it is a capital, but it's not considered as a capital in the entry. What you can write now? What's the entry? Cash account debit to loan account.
Capital account.
X account. If you consider X account, it is called money received from X. X may be a customer. If you write only X account, it means you are receiving money from X. For what you are receiving? For you are going to pay back in the future, right? Is it loan account or X account? That is better now. Left, right, not good. Being center is better, but it is correct. I don't like left, I don't like right. I want to be in the center. That is easy. Of course, it's correct actually. Not being center in this entry, it is correct. What is the entry? Bank account, sorry, cash account debit to X loan account. Why I am denying loan account? Why I don't want to accept loan account? Whose loan account? X, Y, Z. There are so many people. We can borrow money from n number of people. What is the total population of the world? You are laughing. What is the total population of the world? 7 billion. Okay, whatever it is, X. N amount. Okay, that money loan we can create, right? And other entity also there. So we have to identify the loan, whose loan it is. So X loan account, X apostrophe S loan account. If you simply write X account, that is nothing but the customer. He can become a customer. You've taken money from him, you are giving back, or you are taking money from him, you are going to give back, or you already served for him, you are taking money. So there are so many confusions. Simply we can write X is loan account. Okay, so I can understand we're having some fair idea about journalizing or accounting, ledger, trial balance. Okay, now today's class is about financial statement. Financial statement of companies. Can anyone recollect the very, very basic objective of accounting? What is the objective of accounting? Sorry?
To see the financial health of the company.
To come again?
To see the financial health of the company.
To see the financial health of the company. Where I can go and see? Is it to see?
Sir,
To record the financial transactions.
Sorry?
Sir,
To record the financial transactions.
To know the company, the profit is under profit or loss. Okay.
Sir,
To know or to see?
Sir, to know the financial position of.
See and know. See, no, we keep aside. Okay, to find out. No is decent. Okay, no, we can accept also, but see, I don't accept. To know the financial
Position of the company.
position of the company. Another one is
To know the
financial performance
Performance.
of the company. These two are the objective of financial accounting. To know the financial position, to know the financial performance. Only two words: performance, position. Remaining all same in both the sentences. Okay. Now, in order to achieve these two objectives, we are going to prepare some statements. The collection of such statements are called as financial statements. Or simply we can call it as final accounts. Both are one and the same. If I say final account, if I say financial statement, I am referring same thing. Clear? Okay. So two objectives. One is financial performance. Financial performance can be known, can be found out, can be ascertained By preparing a statement, that statement is called as statement of profit or loss. If I say financial performance, if you decode that financial performance, I have two words, that is profit or loss. Financial performance is nothing but profit or loss. It refers to profit or loss. Okay. Financial position can be ascertained or determined or known or found out by preparing another statement. That statement is called as balance sheet. Balance sheet. Okay. If I say financial position, I am talking about three things. I am referring three things. Can you name the three things? Both are same, no? Capital and equity both are same, right? Listen, clarity should be there. Capital and equity both are one and the same in this context. Okay. So we ignore one word. We take only one word, that is equity. Equity is a better way of referring the owner's claim in the business. Equity, assets, and liabilities. If I talk about financial position of any entity, I am referring to these three items only. So these three items are going to be depicted, exhibited in a statement. That statement is balance sheet. Okay. Then what about profit and loss? What is profit? Excess of income over expenditure, income minus expenditure. So when I talk about financial performance, I'm talking about either profit or loss. If that is the case, I'm talking about income and expenditure in detail. So I'm going to compare the total income with the total expenditure. What is left out, I'm going to find out. A minus B is equal to C. That C can be minus or plus. If it is plus, we say it as profit. If it is minus, we say it as loss. So this is going to be done in a statement. That statement is profit and loss account or statement of profit and loss. Statement of profit and loss. Okay. To do this, if I want to prepare these two statements, what I need? Yeah. If you want to join an MBA, we don't want how much mark you got in LKG. So what we need? But you should have done
Degree.
we presume that you passed first standard, but we don't want your first standard mark. Then what we need? Degree certificate and degree mark sheet. So what is a degree certificate here? Very good. Trial balance we need. All your journal, all your ledger, everything is summarized in trial balance. That is your degree certificate. Based on your degree certificate, you are getting admission into post graduation. Simple example. Okay. So we have trial balance. In trial balance, we have so many. What do you have in trial balance?
Ledger accounts.
Ledger accounts you have in trial balance? Yes.
Yes.
So only balances of ledger accounts you have. All ledger accounts you don't have. Suppose there is a ledger account called X account. We have taken a loan from X and we repaid loan to X. So what is the balance in X? 0. Will it appear in the trial balance?
No.
So what do you find in ledger? What do you find in trial balance?
Balances.
Balances of
Ledger balance.
ledger balances. Okay. Name of the ledger account and the amount of balance in that ledger account on that particular period of time, that day, that moment. Right. So that is the base for us to proceed further. Why do we prepare trial balance? Yeah, to know, to locate any arithmetical error. So it is a checkpoint. A checkpoint which is trying to check the arithmetical accuracy, which is trying to ensure the arithmetical accuracy that need to be there in the bookkeeping. Those days, we kept it in manual form of bookkeeping. So there may be a chance of arithmetic error. Today, if I tell my son, take a total of 20 plus 20, he's taking a calculator. 20 plus 20. Then he's asking, sir, 20 means 2 plus 10 or 20? Okay, there's some problem in the mathematics. Those days it is not possible. We have to calculate manually. Okay, when I was in BCom or plus 2, I don't know. I approached an auditor. Okay, I had a inclination to do some CA, chartered accountancy. I approached an auditor. He just took me is that audit room, auditing office. One auditor will be there, 2, 3. Not junior, not even junior. Some clerks will be there. Plus 2, BCom or any mathematics, BSc, whoever it may be. He has given one book. That time only the computer was just introduced. Okay, dot matrix printer, even today somebody use it. Okay, it will type, it will print one page. It will take some 5 minutes to print. He has given this much of book, just like your capstone project, something you are doing, one booklet you're having, some 90 pages, 80 pages project booklet. That much book one, big one, spiral bound one, and he has given. Just take the arithmetical accuracy of this trial. The trial balance is that much. Some 1,000 accounts are there. Trial balance. Take the total. It was very difficult. We have to manually calculate. So to check that arithmetical accuracy, we have this checkpoint. Even today we follow that. Even today we have computerized accounting, but anyway we follow it just to have a check balance. Okay. So after that we are preparing these 2 statements. Okay. So trial balance is the only base now for us to do these 2 things: profit and loss account and the balance sheet. Is it clear? Right. Okay. So when I'm giving you trial balance and asking you to prepare profit and loss account and balance sheet, you have to prepare profit and loss account and balance sheet. Last year, the experience, what it says for me is, you will prepare a journal entry. From the following trial balance, prepare final accounts. That's a question. But what your seniors have done sometime is, they start preparing the journal entry again, neatly. For that, I have to give 10 out of 10. If the question is asked to prepare a journal entry. So please keep in mind, if you look at a trial balance, please read it once again, what it is asked. Okay, right. So only trial balance is enough to prepare these 2 statements. What else we need? Do we need any more thing to prepare? You have ledger balances in the trial balance. You are referring that and you are preparing it. Do you need any more information to prepare this?
Adjustments.
Adjustments. What is adjustments, madam?
Like closing stock is there or what? Prepaid.
There are some items which have not been processed in the accounting process.
Yeah.
Which have not gone through to journal, then ledger, then it has not come to trial balance. It is simply there, raw transaction.
Yeah.
Raw transaction, unrecorded transaction, new transaction, left out transactions. In accounting, we call them as closing entries and adjustment entries.
Yeah.
Closing entries and adjustment entries. Meaning, you have some goods purchased, 1,000 units you purchased. 900 units you sold. Remaining 100 units are there in the godown. What is the value of that 100 units is not known anywhere in the journal. You have to take separately stock taking and you have to inform this is the value of the stock. That is not going to be recorded anywhere. That's called raw transaction, closing stock. If you don't consider this closing stock, you are ignoring some of the revenue of the company. You assume that all the hundreds were sold, but really it is not so. So what is the figure captured in sales is not the sales of all the goods what you purchased, not necessarily to be. There may be some kinds of goods left out. So that is called adjustment. So where I will find this, it is to be there in a paragraph. We will be given with a paragraph. Closing stock. One example. Another example, you paid 20,000 rupees as salary. You paid 20,000 rupees as salary. Okay. But there is one employee, he has not received salary yet. There are 10 employees. Okay, sorry, 11 employees. Per employee, 2,000 rupees as salary. Per annum. Just example. How much I should have paid? 22. But how much I paid? 20. There was one employee who was on leave for 2-3 days. He did not come and collect the salary. Still the money is with me. So that 2000 is called as not recorded. Okay, it's not paid, not recorded. What is the 2000 called in our accounting?
Outstanding.
Outstanding. Accrued, but I have not paid because he did not come and collect it. So how much salary I should account it in the expenditure column to find out the profit of the company? 22. Because at any point in time, he will come and collect it. I have to give to him. He served for us. So the 2000 is called as outstanding salary, outstanding expenses. This I don't know from the trial balance. Suppose you can argue one thing. There are some people are doing that. They just create an entry, then they will pay. Salary account debit to salary outstanding account 22,000. Now how much is there in the salary? 22. Automatically it gone. When it is paid, what they will do? Salary outstanding account debit to cash 20,000. Still there are 2,000 rupees pending in what? Salary outstanding. That balance will come to trial balance. When you prepare trial balance, it will come. But in general, some people may not be doing this. If they are doing it, okay, well and good, it will come and appear in the trial balance. We don't worry. But it is not done, they will give you the information. That information is called as adjustment. Adjustment. They will tell you in the adjustment, point number 2. Salary of 2,000 rupees is still outstanding, arrear, yet to be payable, like that. So what to do now? This 2,000 rupees, it need to be added with the salary what you are finding in the trial balance. Trial balance 20,000 is there. 2,000 is given in the adjustment. So total salary to find out your total expenditure, you have to consider 22, not 20. Similarly, 1,000 rupees salary paid in advance. Another case. 20 is there in the trial balance salary account, 20,000 rupees. Adjustment they're telling you 1,000 rupees salary is paid in advance. Then how much salary you have to consider in the expense column? 21. 1,000 is what? Advance paid in 23. 20 plus 21. 21 there is a logic. But 23 where is it? Huh? It make me to remind the story. Okay, people are sleeping online, no, right? There was an
No,
interview.
sir.
Yeah, there was an
No,
interview.
sir.
Yes, thank you. There was an interview in a company for accountant position. People are applied. People have applied. 20 people applied. Okay, one among them is one of my students. Assume. Okay. Question was asked. One question. 20 plus 20, how much? There was a question. 20 plus 20 is equal to 20. 2 20s, 40. Okay, 40. But this poor boy, what did he answer is 36. Somehow he calculated, he told 36. 1, 2, 3, like that. 36. Interview over. He come to the teacher. Sir, there was an interview. I appeared for an interview. They asked a question, 20 plus 20 is equal to how much? I answered 36. Is it correct, sir? This poor teacher is pity on that boy. No, my dear student, it is not correct. Better luck next time. This boy is very sorrowful and he is coming back to home. After 1 week, to his surprise, there was a letter coming from the office, from the company, where he got selected. This boy was shocked. And he's very honest boy. What he is doing, he's taking the appointment order and going to the MD. Sir, you are by mistakenly sending a letter to me. I was not the one who should have been selected. Please take back your appointment order. That MD was telling, "Hey, gentlemen, we have not sent any letter by mistake. We have sent a letter by selection only." Oh, sir, my teacher told 20 plus 20 is equal to 40, but I told only 36. But you are giving a job to me. Don't worry. All the people have told some other answer, 50, 56, 60, 62. You are the only person who has told the answer near to the real answer. So we selected you. That's the interview, right? Choosing the best candidates from the available lot. I can't wait now. Suppose if I wait for another 1 month, who will do my accounting job? I have to appoint somebody. Among the available, who is the best, nearest to the answer? Okay. So 20,000 rupees salary found in trial balance. 1,000 rupees paid in advance means you have to minus it. See, concept is matching concept. Current year income should be matched with current year expenditure. All right, expenditure. So 20 paid, 1,000 rupees paid in advance. Out of the 20,000 paid in advance. So how much you have to treat for current year salary? 19,000. Clear? 19,000. So what about the 1,000 rupees? What do you do? You have to consider that as a asset. Our money, instead of in our cash box, it is there in the pocket of. So that 1,000 is called as salary paid in advance. It should be treated as current asset in the balance sheet. That goes to financial position. Okay. Like this, there are so many. We don't want to discuss everything now. We will discuss one by one. We are doing the problem. Okay. Now come back to the main discussion. These two statements to be prepared based on the trial balance as well as some of the adjustments. Okay. Some of the adjustments. Okay. These adjustment items should be appearing in two places. Please understand. For example, the salary outstanding, I added with the salary when I am calculating my total expenditure, as well as I taken that outstanding amount as liability. Outstanding as liability in the balance sheet. Similarly, the salary paid in advance, I minused in the salary while calculating the total expenditure. Same time, I have taken that 1,000 rupees into balance sheet in the name of current asset, prepaid salary. So like this, if you find an item in the adjustment, you should, without forget, write in two places. Why two places? It has not been recorded anywhere in the books of accounts so far. We are following dual aspect concept, double entry bookkeeping system. Each and every transaction has twofold effect. Just now I asked you few transaction for entry. You all told. Received money from X, cash account debit to X. Payment into bank, bank account debit to cash. Withdraw money from bank, cash account debit to bank. So for each and every transaction, you have to account in it, to account into it. So we are writing in journal, that comes to ledger, that comes to trial balance. But these transactions, which are called as adjustments or raw transactions, have not gone through any of the books of accounts. Directly, it is going to come and appear in the final stage, financial statements, final accounts. So we have to there only finish the two entries, two aspect. That is why it is recorded in two places. Okay, just opposite two places. If it is written in asset one side, it will be written in liability other side. Debit means credit. Like that. Is it clear? Now there are some material available here. We just see this and we'll come back to the preparation part. Okay, I'll show you the P&L account format and I'll give you the balance sheet format and you'll work out one question. That's the agenda. Clear? And one more thing you have to understand, we have lot of forms of business ownership. We discussed very beginning. You remember? 5 forms of business ownership. Proprietorship, partnership,
Hindu undivided
family,
joint stock company.
joint stock company and cooperative form of organization. Okay, joint stock company is nothing but limited liability company. 5, proprietorship, partnership, HUF, cooperative form and joint stock form. Joint stock form is nothing but corporate. In your language, it's corporate. Okay, if I ask somebody in my class, you will say, what did you learn from the internship? That is called internship, no? He will say, I just wanted to go and see the corporate world. I don't know where is that world. Okay, there is separate world, corporate world. The corporate you are saying, no? That's called company form of organization. Company form of organization. Limited liability companies. Okay, among these 5 forms of business organization ownership, we are concerned about only one. That is the last one. That is called joint stock companies. We are not going to prepare the financial statement of the 4 forms of ownership. We are concerned about only limited liability companies balance sheet as well as the profit and loss account. Why? Because they are only allowed to collect money from anybody in the world. Anybody in the world. So they need to be watched more intensively. The chance of fraud is more, as well as if they commit any fraud, the shock in the economy is more. Okay. So that is why SEBI wants to, SEBI, Securities and Exchange Board of India, wants to have always a vigilant eye on them. The transparency is more required, accountability is more required, governance is more required, and also opportunity. Being an executive, being an employee, opportunity. Who can pay me more? Only companies, only corporates, because they are only having lot of business operations. In that manner, we concerned about only knowing about the financial statement of joint stock companies. Okay. So here, look at this meaning of company and maintenance of books of accounts. We already discussed about it. Preparation of financial statement. Just now I told you, why do we prepare financial statement? We discussed to achieve the two objectives. Okay. Then based on the financial performance of the company, managerial remuneration is going to be paid for the managers of the company. Okay. And then divisible profit is going to come for shareholders. And then we are going to declare dividend based on the profit available and based on the policy of the company. Please understand, sir, just profit is there. Will I get dividend? No, there is no guarantee. But dividend is a function of profit. That is true. But it does not mean that if there is a profit, I will definitely get dividend. No, the company may retain the profit for further expansion of the company. But anyway, it is based on the divisible profit. %15 of what? No, there is nothing. Simple. Company, when your company will decide to pay profit, if a company is giving profit, is a good company or not? But I am saying it's a bad company. A company which is giving a dividend is not a good. Okay, bad is not a good company according to me. Why? Why you are telling a company which is giving a yes? Not expecting. If it is capable of investing, it's a good company. If it is not capable, what they will do with that money? If I am calling you, please all of you come 1:30. After you all coming here and sitting here, I am all sitting there and doing something on my own. Then what is the use of calling you all of you here? That's waste, right? So when can I call you all of you? When can I ask you to invest your time? When I think that I can do something for your betterment, then I can call you to invest some time. Otherwise, better what should I do? I should allow you to go anywhere, whatever you want, because you can earn some good time there. You can have some good time there, or some good learning there, or some good earning there. Are you able to connect what I'm saying? So Microsoft, to take an example, up to 1990s, if I'm not wrong, up to 1990, they did not even give a single dollar as a dividend. Why? That was a growth stage for them. After that, only so many other companies have come into the competition. After that, they were trying to be a monopoly. Of course, they were small here and there, some companies, but they invested again and again in the technology. So any company which is having profit and not distributing the profit, that company is giving a good signal to the market that they are growing. Any company is having enormous profit and distributing all the profit in the dividend form, that gives a signal that they are not growing company. You will study this in the next semester in the subject called corporate finance. Okay, let us not go there, come back. Now, divisible profit can be found out from this statement, and also you can decide how much I'm going to give as dividend, how much I'm going to retain in the business. 50-50. Sir, I have 1 crore profit. 50 lakhs I'm retaining in the business itself as a reserve. 50 lakhs I'm going to give back to the shareholder as dividend. You cannot always take the money of shareholder and tell them I am growing, so please wait. There are some people, a bird in the hand is 1,000 times better than a bird in the nest. Give me today, I want to cut it and eat. They are telling I will grow it after now it's 1 kg only. I'll grow it, it will become 5 kg. That time I will give you. What's the guarantee that the bird will be surviving in your treatment? How much good food you are giving? There may be some disease coming in. Okay, so there is a possibility of loss also. Some investors will be like that. I don't want your strategy of growing my profit with your hand. I know how to grow my profit. You give my profit, I will invest in some other businesses. Or I need some money. I want to, suppose investors are all above 60. They don't want your money to grow. What they want? They want the food. You give the money, I'll just take my livelihood, daily expenditure. There are some investors. Okay, you study that in next semester. Just to keep in mind, profit management. This is called earnings management. Okay, earnings management. So all these things are interrelated. So how much you are transferring to reserve, how much you are giving to shareholder in the form of dividend. So please keep a point in mind. Dividend distribution is not compulsory. It's only purely optional, left to the policy of the management. Okay, of course, who is management? Are the shareholders collectively electing somebody is the manager? Okay. Okay, all these things we go through later. Now directly we can jump into the profit and loss account and balance sheet. Look at this statement of profit and loss account and balance. These two only we are going to prepare. Of course, financial statement includes the other three also. Cash flow statement we are going to prepare a little later. I consider cash flow statement as a tool for analysis. It is not just a statement, but it is nowadays, it is annexed with your profit and loss account. If a company is giving you statement along with P&L account and balance sheet, you get cash flow statement also. But actually speaking, originally it is a tool for analyzing your financial statement. Okay. And then another two. What are the two? Statement of changes in equity. What was the equity in the first beginning of this year? And what is the equity today? Owners claim how it was. Owners claim how it is now. What's the change? Why that change? We can do it in a statement. That statement is called a statement of changes in equity. And to prepare this financial statement, especially balance sheet and statement of profit and loss account, we need some workings. That workings are called as notes to accounts. Notes to accounts or schedule to accounts. Okay. Right. Though it is 5, we are going to prepare only 2 as of now. I mean, including note 3. Okay. Cash flow separately we are going to prepare. Next. Any doubt up to this? No, right? You can directly go and see the format of the profit and loss account. Okay, who is giving this format of profit and loss account and balance sheet? Sorry, who is giving? Statutory body. Statutory body is a very common term, no? Thank God you did not tell government. That's also true. IFRS is not a statutory body. IFRS is a statement actually. It's a rule. Indian Companies Act is giving the format. Normally, all the companies will prepare 2 P&L account and 2 balance sheet. So what is this 2? One is for Companies Act. That is for the shareholder. Another one is for Income Tax Act. Income Tax Act does not believing you. According to Companies Act, if you prepare a balance P&L account, this is the profit, sir. No, I don't want this profit. It may be false, it may be true. But I want you to prepare a profit and loss account statement based on my guidelines. So that amount what you are getting as a profit will be true profit on which I can take some tax. Okay. So this is called books of accounts for Companies Act. Another one is for Income Tax Act. If you are studying, if you have any specialization on income tax, that time you may study that how to prepare. Same principle only, but here and there some kind of expenses here it can be charged in Companies Act. Suppose if you charge an expense, what will happen to the profit? Profit will come down. Expenses are charged against profit. Okay. Companies Act is little liberal in allowing you to charge some of the expenditure. Okay, all the expenditure based on the financial system, financial logic, they allow you to deduct. from the profit, from the income to find out the profit. But Income Tax Act is always very stringent enough to find out whether it is really an expenditure of business or not. If it is not an expenditure of business, it will not allow you to deduct. So that the profit will be more, they can get more tax. That's it. Simple logic. Okay. So according to Companies Act 2013, we have this format of profit and loss account and balance sheet. One small warning or caution or information to those who have already studied financial accounting, BCom, BBA, or so-called business or accounting student. You have to prepare the P&L account and the balance sheet, only the format what I am going to show you now. You should not prepare the P&L account and balance sheet what you studied something different from this. Okay. Is it clear? Those who are already know something about profit and loss account and balance sheet I'm talking about. Right? Yeah. Now come to the format. Look at this. This is the format of profit, sorry, in balance sheet. I'll give you one full format. Wait, if it is there, we'll check it. Yeah, please. You remember the other day, one of the days in which we downloaded the balance sheet and profit and loss account of Tata Motors. Same format. You have that in your phone now. Okay, all of you take it. I don't think it is here. I've taken a wrong file. Without that, they have come to a calculation. Okay, please take your phone and open this Tata Motors balance sheet as well as the Tata Motors P&L account. We take that again in our notebook. We will write it. Sorry.
Down only it is showing
Okay,
statement.
okay, it is posted in the group. No need of going to website and all. It's already done. It is there in your group now. You can see that. Just take it and write it in the book with the help of me. Also, Kiran, there's some information. All of you take a note. Specimen of or format of profit and loss account. Format of profit and loss account. Don't just copy. I'll tell here and there some modifications. You have to follow what I'm saying. It's sent. It's not there. Yeah. Okay, just start writing. By the time it will download. Format of profit and loss account. Format of profit and loss account or statement of profit and loss. Okay, particulars, note number, amount. 3 columns. It's a table actually. Okay, like this. Look at this. Like this. Particulars, note number, amount. 3 columns. It's on the screen. Same format. Okay. Statement of profit and loss of so and so company for the year ended. That's the heading. For the year ended that year, 31st March, 21, 22, 23, or whatever it is. Okay, that's the heading. Take a format. Particulars, note number, and then third column is amount. Look at this. Same like this. I'm telling about this is particulars. This is particulars. This is note number or schedule number. This is amount. Okay. Amount. In real time, what will happen? They will write 2 amount column. One is for the current year. One is for the previous year. We write for only 1 year. Okay. All right. So now you have to start with revenue from operation. In particulars column, Roman letter 1, revenue from operation. Revenue from operation. What is this revenue from operation? Sales. How do you find out this? Okay, before that, one more point you have to remember. In the trial balance, You have lot of items, right? Lot of ledger balances. All those ledger balances will be under any one of the 5 categories. You remember long back we studied 5 basic terminologies in accounting. What is that? Income, expense, equity, income and revenue both are same now in this context. Okay, income, expenditure, equity, assets, liabilities. I repeat again. Income, expenditure, asset, liability, equity. Only these 5 there in the trial balance in different forms. Whatever you find in trial balance, that should fall under any one of these 5 categories. Simple example, land and building is there in trial balance. It falls under which category? Clear? Share capital is there. It falls under equity. Reserves and surplus. It falls under equity. Equity. Profit and loss account. It falls under equity. Profit and loss account. Okay. Suppose salary, donation, sundry debtors. Huh? Sundry debtors. Asset. Asset. Bills receivable. Asset. Miscellaneous expenditure. Wages. Bonus. Bank loan. Liability. Bank deposit. Asset. Debentures. Liability. Okay. Wages outstanding. Liability. Wages outstanding. Prepaid insurance. Asset. So like this, there are so many items in the trial balance from the ledger balances. While reading the trial balance, you should be very careful about each and every item. By reading it, you should remember which item it is belonging to, whether it is equity, liability, asset, income, or expenditure. Okay. After this, what should you do? The balance sheet will take care of only 2 things. What are they? Said 3 things. What are they? Asset, liability, and equity. That's all. The remaining 2 will go to P&L account. What are the 2? Income and expenditure. These clarities should be there first. You should not write one asset into P&L account. You should not write one expenditure into balance sheet. If you do that, then definitely I'll have to give you 0. Other mistakes, okay. But principal, expenditure, income goes to P&L account. Equity, asset, liability goes to balance sheet. These clarities should be there. This you can remember easily, no problem. But your problem starts in what are the items to be included in equity? What are the items to be included in expenditure? What are the items to be included in other 3 categories? That you have to practice. Or common sense also. It is not very different from what we in day-to-day life you use it. Building is an asset, everybody knows it. Cash, asset, bank balance, asset. Truck, asset, furniture, asset. Okay. Based on this logic only we are going to prepare. Okay. So now revenue from operation. How do I find out revenue from operation? Write it somewhere. The off page you can leave because this statement goes to off pages or off or more also. You can go and write somewhere. Revenue from operation is equal to. How I know? See here the statement you are going to write some amount. Revenue from operation you are going to write some amount. It is not directly found in trial balance. In trial balance there are some items. With the help of that items you have to find out revenue from operation. I'm trying to tell how it is done. Revenue from operation is equal to total sales minus expenses. Purchases. Both are same now. One of the expense is purchase. Revenue from operation. What revenue from operation? Total sales minus
Closing stock.
total sales minus
Closing stock.
closing stock. Why, madam? Closing stock? What is sales? You'll find. Suppose you're finding 5 lakhs sales in the trial balance.
Sorry,
That's
sorry.
not total sales, right?
Yeah,
What does
sales.
it mean? 5 lakh worth of? No. Even you might have sold 1 rupee worth of material for how much? 5 lakhs. For the buyer, it is worth for how much? 5 lakhs. For you, it is worth for the price at which you created it or you brought it. Revenue from operation is nothing but net revenue. Sales minus sales return. Sales minus sales return. Right? Total sales minus sales return. If there is no sales return, your sales becomes revenue from operation. Sales return means what? You sold to your customer, they returned back. Sir, these are the goods which are not up to the mark, take it back. Okay, where you can find these 2 items? Only trial balance. Whatever I am asking you, same thing, answer is trial balance. If trial balance is not accepted, then another one is adjustments. Because we are going to have these 2 only for preparing these 2 statements. Okay, next, revenue from operation is done. Come to the P&L account. Come to the statement again. Next line, point number 2, Roman letter 2, other income. Other income. No, you are mistaking. It is directly going to the bank. Which is going? Cash is going to the bank. But what entry you are making? Goods sold for check. What's the entry? Goods sold for cash. What's the entry? Tell the entry. In normal way. Cash account, bank account debit to sales account. So bank account balance increased. In another ledger account, my sales account balance is increasing. We are writing in 2 places. One transaction is recorded in 2 places. One is bank balance increased. True, you are right. How do I know that that sales is already captured? In sales ledger, that amount is increased. In sales ledger. If it is a sales book, credit sales will be captured there. Okay, credit sales will be captured there. Cash sales will not be captured there. Cash sales will be going to ledger, sales ledger. So sales ledger contains both credit sales as well as cash sales. Cash and credit sales both are combined and written in sales ledger. The sales ledger is totaled and the balance of sales ledger comes to trial balance. So in trial balance, if you look at the sales, that is the total sales made by the in that particular period of time to various people in different point in time, either for cash or for credit as well. Okay, cash means bank also, right? So next point, other income. What is other income? Other than sales income, if you have any other income in the company, that comes under other income. Simple example is share transfer fee. Share transfer fees. What is share transfer fees? I am the shareholder of this company. I sold it to someone else. That someone else's name should be inserted in the shareholders register maintained by the company. For that, he has to pay some fees. That fee is called as share transfer fee. If anything is of that nature, that will come under which category? Other income. You have to check if the trial balance. Yeah. No, I'm not telling the amount what I receive from you by selling my share should be shown in the company's other income. You are buying from me. I am selling to you. Suppose you are giving me 1,000 rupees. I am giving you the share certificate to you. My job is over. Now, in the company's register, whose name is there? My name is there. If you don't do anything, if the company is giving me giving dividend, they will send it to me only. Because in the company's register, whose name is there? My name is there. It's simple example. Suppose you have 10 acres of land in near Anekal. Your new airport is going to come in Anekal. Assume government is going to take a survey. They're going to give compensation. Okay, but you already sold to me. 2 years back, you sold that land to me. In Register office, we registered the sale. But the village administrative office record, whose name is there? Your name is there. The seller name is there. I have not met the village administrative officer by showing this sale deed to change the name from yours to mine. If it is not done, what the government will do? Government will call you and give the compensation to you. This is what happening in so many places. Okay, so immediately what you buy, you have to change the name in the original record. Okay, for that you have to pay some fees to the village administrative officer. Fees and fees. That is different. But in share transfer office, share transfer case, only one fees. You have to send the fees. That fee is called as share transfer fee. That is income of the company or not? Still confusing? Yeah. So that is income for the company. If anything like that is there, that should come under other income. Okay, interest received from the bank. Okay, or any other sort of income. Simple example is, simple understanding is, other than sales, if you have any income, that should come under other income. Point number one, from operation. Suppose the company is having a service. The business itself is serving.
Able to hear properly.
You are not able to hear me properly now? Am I audible now?
No, sir.
Voice is very low.
Voice is very low. Can you just send one message so that the office people will see that and come and correct it? I'll
It's
also send a
clear.
message to them. Can you put one?
They can try to
message in
wear
the
their
chat?
headphones, sir. If they wear
Sorry?
the headphones, if they wear their headphones, they can hear.
Yeah. Through headphones, it is clear.
Yeah.
It is clear. It is clear.
We can hear
It is
clearly.
clear. It is very clear.
Yeah.
Okay. I'm wearing it only. I'll try. Yeah. If it is not okay.
No, not you, sir. If we were.
If it is any problem, you can just come back to us. No problem. Now we are listening. I think it is correct. Yeah. So any income from operation, your main business is what? Sir, I am an auditing firm. Okay, auditing firm. I serve for my client and then I'll collect some fees. That fee is not other income. That fee is revenue from operation. Your operation is that one only. So other than that, if you do anything, suppose you have some fixed deposit, you have deposited 5 lakh rupees in the bank. For that, you are receiving some interest. You let out one small room nearby your office. You have some unused land. You are letting it out. All those things comes under other income. Scrap. Then again, what scrap is and how are you going to record it? If it is purely other, it will come under other income. Otherwise, sometime it will be the main income itself. That again, you have to look for more clarity. That is more clarity. Okay, depending upon the accounting standard. No, I'm just, old furniture sold and all is not coming under any one of this category. That's not income, right? That's not income, right? You are converting your one asset to one asset. That's all. Old furniture is an asset that comes under another asset cash. Suppose you are selling one asset, 1 lakh rupees worth. You are selling it for 1.5 lakhs, 50,000 rupees profit. That 50,000 should come under other income. Profit on sale of asset. Okay, right. And again, the scrap and all is to be very carefully dealt with according to your accounting standard. Okay, we can't just say that it should come under other income or it should come under main income. According to the accounting standard, you have to check which company you are, what scrap you are scrapping, at what stage you are doing. All those things matters. Okay, we will not go in that minute details. Come back. Now these two together is called. These two together is called. It is written there A within bracket. That is called
Income.
total income. Total income. Total income. Okay. Minus third one. Point number 3. Take it next one. Total income. Total income. Other income. Next line is total income. You have to write here total income. Total income. The A is nothing but total income. You have to write it total income. Okay. Total income. Next line is, fourth line is expenses. Okay. Expenses. Now income is there with us. The total we found out. What do you have to do now? You have to find out the expenditure and you have to minus the expenditure from income to find out the
Profit and loss account.
Profit or loss. Okay. So expenses. You can't just like that write all the expenses. You have to write all the expenses, but you cannot write just like that. There is an order. There is a division also, classification also. First expense is cost of material consumed. Under expense, point number A or point number 1. Cost of material consumed. Cost of material consumed. Okay. Come to the note and write it. How do you calculate this? There is no direct item given in the trial balance, like cost of materials consumed. If it is given, you take it, write it, no problem. But if it is not given, how do we find it out? What do you mean by cost of materials consumed? Yeah. And now you are telling buying a product and you are selling. That is called trading. For trading companies, this item will be not there. Which item? Cost of material consumed. What is the cost of material consumed? Making your output. How much worth of raw material you used it? That's what cost of material consumed. This will be there only for manufacturing companies. Or a company does manufacture as well as buy and sell. There are some companies. Okay. So point number A, cost of material consumed. Come to the note, write it how it is calculated. Cost of material consumed is equal to cost of material consumed is equal to opening stock of raw material, plus purchase of raw material, plus freight on purchase of raw material, freight. FREIGHT. Freight means what? The transport charges. Freight on purchase of raw material minus purchase return of raw material minus purchase returns of raw material minus closing stock of raw material. Raw material again minus closing stock of raw material. So all these things where I can find all these closing items, I can find it in the adjustment. All the opening items, I can find it in the trial balance itself. Right? Okay. So that's done. Cost of materials consumed. Next, point number 2 under expense column. Purchase of stock in trade. It is not there. Write it. Purchase of stock in trade. Point number 2 under expense column. Purchase of stock in trade. Don't confuse, sir. Just now you told one purchase to calculate the cost of materials consumed. And again, you are telling one separate item in the expense column as purchase. What is these two? The two are different. That one is raw material. This one is just goods you are buying, keeping in the showroom and just selling. This second item will come only for whom? Trading companies. Purchase of stock in trade. Point number 2 under expense column. Purchase of stock in trade. What is stock in trade? Stock in trade is nothing but the good what you are buying just for as it is selling. As it is selling. For a car showroom company, a car is called as stock in trade. Clear? For furniture vending company, the furnitures are called as stock in trade. The furniture manufacturer, the furniture is called as finished goods. And the timber and other thing what you buy is called cost of raw material. Point number 3 under expense column. Point number 3, change in inventory. Yeah, whatever is there in the that is coming now. What we are writing now is called that adjustment. Change in inventory. Change in inventory.
Sir, can you repeat the previous point, sir?
Previous point is
what we need to add under expenses. The second one which is missing.
Purchase of stock in trade, nothing to be added, nothing to be deducted.
Okay.
Just what is there in the trial balance, we are taking and writing it. The total purchase. Suppose you bought for 20 lakh rupees some goods to sell. Whether you sold it or not, no matter. 1 second. Okay. Okay. For purchase return, if is there, the net purchase. You have to minus there. Okay. You have to minus. Okay. Purchase return is there means you have to minus whatever it may be. Okay. It is finished goods or it is stock in trade or it is a raw material, whatever it is. Okay. Purchase return. What we here refer to net. Okay. Purchase of stock in trade. Within bracket, write it net to clarify that. Within bracket, write it net, N-E-T, net. Meaning total purchase of stock in trade minus purchase return. Yeah. Okay. Now next point is change in inventory. What is the change in inventory? Opening minus closing of all inventories except one thing already we adjusted. What is that? Raw material opening and closing we already adjusted in the cost of material consumed. You remember? Except that all other things opening, closing you have to adjust. Come to the working and write it. Change in inventory is equal to opening stock of work in progress plus opening stock of finished goods plus opening stock of stock in trade. I repeat, opening stock of work in progress plus opening stock of finished goods plus opening stock of stock in trade. Okay, minus closing stock of all these three. Closing stock of work in progress minus closing stock of finished goods minus closing stock of stock in trade. Opening stock of work in progress plus opening stock of finished goods plus opening stock of stock in trade minus closing stock of work in progress minus closing stock of finished goods minus closing stock of stock in trade. The answer can be minus also sometimes because three things you are adding and you're minusing three things from these three from the total. Okay, the what is you are going to minus? Suppose it is 3 lakhs. What is the amount already there in the opening is 2 lakhs only means 2 minus 3 is equal to minus 1. It can be minus 1 also. No, goods in transit, we take it to the purchase only. Purchase only. That much minute, you are working in accounts department. Okay, that much minute, we don't want to go. Of course, that is not taken here. That is coming under purchase only. Okay, transit. Some company will have still to receive. Okay, when you will make the entry, since you touched upon, we just think about it for 1 minute. Suppose you are calling a buyer, you are calling a vendor and telling that I want this many items, send it. He's invoicing it. Okay. Now, when do you make an entry in your books of accounts? After receiving the invoice, after you accepted for the contract. Okay. Suppose he may promise that I will deliver to your warehouse, or it is you to come and take it. So if it is you have to go and collect it, after invoice, you are making entry. That is your responsibility. Even it is in transit, that's already there in your purchase account. Okay. Suppose the first case, the seller is coming and giving you. That time you won't pass any entry till the material reaches you. So that time if it is in transit, we don't care. That is not in purchase. Next. Point number 1, 2, 3, 4th one. Employee benefit expenses. Employee benefit expenses. What is this employee benefit expenses? I think we are going very slow. Employee benefit expenses. What is this? All expenses relating to employee salary, bonus, wage, all your coupons, everything will come under them. Okay. Next item is, no, don't write finance cost. I'll tell you one more thing. Depreciation and amortization expenses. Point number E, right? Depreciation and amortization expenses. Amortization, A-M-O-R-T-I-S-A-T-I-O-N, amortization. What is this? Reduction in the value of fixed asset is called, what is that called? Tangible fixed asset is called depreciation. Intangible fixed asset is called amortization. Suppose goodwill is there in the trial balance, 5 lakh rupee. In adjustment, they're telling you, write off the goodwill to the tune of 10%. So that 50,000 rupees, what you are going to minus from the original value of 5 lakhs is called as amortization. Okay. So you have to consider that 50,000 rupees in this getting called depreciation and amortization. Suppose there is a machinery, 10 lakh rupees worth. In the adjustment, they are telling you, provide depreciation of 10%. So on 10 lakh, 10% is equal to 1 lakh. 1 lakh is called depreciation, 50,000 is called amortization. Both put together, you have to write it in this column called depreciation and amortization. How did you calculate? One is there, okay. Suppose there are 10 assets, 6 tangible assets, 4 intangible assets are there. So you have to make one note. That's why note number is given there. Okay. The working note. How did you arrive at that 1,50,000, which you are showing under the heading called depreciation and amortization, should be shown as a separate note. Next. Yeah. Yeah, yes. Next, finance cost. Finance cost is 6th one or 5th one? 6th one. Finance cost. 6th expenditure is finance cost. All interest, bank charges will be recorded in this heading. Interest on bank loan, interest on debenture, interest on any other loan. Interest, mainly interest, plus any other incidental charges of bank account. Suppose there's a check dishonored, for that they are penalizing you. Okay, or you are having a current account, AMC you have to pay, annual maintenance charge. All those finance costs will come under. Yeah, all. Okay, suppose there's a penalty or a fine, you did something, all those things, okay, will come under finance cost. Mainly interest, debenture interest and bank interest. What you have to pay. What you paid is not only accounted here. What you are supposed to pay. Suppose there is a loan you took for 10 lakh rupee. 12% rate of interest. How much interest you have to pay per annum? 1,20,000. But you paid only 1 lakh. 20,000 is not yet paid. How do I know? They will be giving an adjustment. Rate of interest on the loan is 12%. But already in the trial balance, you are finding an item called interest paid on loan is equal to how much? 1 lakh. But here it is given 12%. So you have to calculate. 12% is how much? 1,20,000. How much I paid? Only 1 lakh. Still payable is 20 more thousands. So how much you have to take it in this finance cost? 120. Not 1 lakh. What about the 20,000? You have to take one more time in the balance sheet under liability. Interest outstanding, interest payable. Okay. Paid plus payable is equal to total interest of the particular year. That goes to finance cost. If anything still payable but due, that goes to liability in the balance sheet. Okay, next. Last item in the expense column is other expenses. Other expenses. All other expenses except the 6, everything will come under this category. Example, tax. Tax and expense. India needs people like you only. Tax and expense or what? You pay, whatever you pay is not expense, gentlemen. Whatever you pay is expense. No, I'm not paying tax. They're taking it from me. I'm not paying. Every month, they're giving me salary only after taking the, thief, thief. They will come and take what you have. They will come and take what you have. But these people, what they're doing, they take and give you what should you have. So it is not a, see, this is 30th July, 31st July. So I'm more worried about, that's why I'm telling all these things. Okay, tax is not a expense. Tax is an appropriation of profit. We are talking about corporate tax, not individual tax. Corporate tax. So tax is a appropriation of profit. What is appropriation of profit? What is appropriation? Appropriation means if you have something that you are appropriating it. That you are sharing, distributing, managing. So what I have is profit. Out of profit, I'm just giving something to government according to their rules and regulations. Okay. Corporate tax. How much? 33% now? 30%? How much? Corporate tax. 30%? All the companies? No, not all the companies. There is some, but as an average, 30%, by and large, 30%. 30% company has to pay. Then which company will have to maintain the proper books of accounts? 30% you are asking. Okay, that's politics, economics, actually. Okay, let us start. So it's not an expenditure. So what is other expense? Yeah, maintenance, newspaper, buying of newspaper, electricity, phone bill, tea, coffee. Yeah, we'll go. Yeah. Tea, coffee, then sundry expenses, preliminary expenses, donation given, legal charges. Which one? CSR is not an expense. That should be out of, that's appropriation of profit actually. After paying tax, if you have anything, go and do CSR. CSR is out of, now it's 2%, right? On your net profit. That also I have doubt. It's a book profit or taxable profit. I don't know. I'm not sure about it. Huh? But 2% on net profit. That much clarity I have. So that's not expense actually. That's not expense. You set aside some 2% of your profit for taking care of CSR activities. You can give to somebody or you can yourself do it. I'll check and tell you. I'll check and tell you. I don't know actually. That's tax. According to Income Tax Act 1961, what is allowable expenditure? That question is asked by him. Is CSR expenditure is allowable expenditure or not allowable expenditure? I'm not sure about it. I'll check and tell you. According to Income Tax Act, while you prepare the P&L account, you have to consent about that. Okay. Anyway, donation, legal charges, preliminary expense, donation, puja expense, sundry expense, tea, coffee, entertainment expense, recreation, all these comes under other expenses. So you have 6 heading. If you don't have anything to fit in, you have to bring into other expense. The last one, other expenses. Next, total expenses. Total expenses. Total expenses. Total expenses. Yeah, sum of all these expenditure heading. Okay. Now you are mine. Next line. Net profit before tax. Net profit before tax. Or net also don't use it. Profit before tax. That's the word they are using. Profit before tax. If you say net profit, there should be something called gross profit. We don't have that. Okay. Profit before tax. Next line. How do you find out this profit before tax? The total income is there now. From there, you have to minus total expenditure. Profit before tax. Next, minus tax. Minus corporate tax or provision for tax or simply tax. Tax. Okay. After that, what you will get is after profit before tax minus tax. If you minus the total expenditure from the total income, you'll get one answer. No, that answer is called profit before tax. Clear? From that, you have to minus the tax. There is no word called net profit in this statement. Of course, it's a net profit only in our accounting term, but this statement is saying just profit after tax. Profit after tax. Profit after tax. That's the last line. Profit after tax. Minus tax. Profit after tax. Okay. From the profit before tax minus the tax, you will get profit after tax. That's over. Okay. This is about the. Okay. Next heading is balance sheet. Balance sheet of so and so company as on. Balance sheet of company name you have to write. After that, as on. Same logic, same format, you take it. Yeah. Look at this. Particulars, note number, amount. Balance sheet. Particulars, note number, amount. Okay. Under particulars column, point number Roman letter 1. That is equity and liabilities. You remember I already told you from the trial balance, you have to take equity, liabilities and asset and you have to write it in the balance sheet. That is, yeah, particulars, note number and amount. Same column as it was in the P&L account. Okay. So the different components in the balance sheet. The first component is Roman letter 1, equity and liabilities. Equity and liabilities. Under that, point number 1, shareholder fund. Shareholder fund. Under that, point number 1, share capital, or point number A, share capital. Okay, what is share capital here? How do you arrive at this amount? From the trial balance, you have to add all the share capital. There may be equity share capital, there may be preference share capital. Even inside the equity share capital, there will be 2-3 denomination. 2,000 equity shares of 100 each, 5,000 equity shares of 20 each, 10,000 equity shares of 10 each, whatever it is. If it is share capital, bring separately in a note, write all the things, take the amount, total it, bring it here. Share capital. Clear? Point number B. Reserves and surplus. What is reserves and surplus? Reserve means your previous year profit undistributed. I mean, kept aside for some specific purpose or general purpose. Reserve. How do you find out reserve? Reserve is very simple. Last year reserve will be there in the P&L, I mean, trial balance. Reserve, general reserve, capital reserve. Any prefix will be there, but the name will be reserve. Simple example, general reserve. Suppose 20,000 rupees is there in the trial balance in the name of general reserve. That is opening balance. In the adjustment, they will tell you transfer 10,000 rupees from current year profit to general reserve. What does it mean? From current year profit, you have to take 10,000 rupees and you have to transfer to general reserve. What was the general reserve balance previously? 20,000. Now how much you are adding? 10,000. So total reserve should be there in the balance sheet of the current year is
30,000.
So yeah, that is how you are finding out the reserve. But it is not only reserve and surplus. What is surplus? Surplus is nothing but layman's understanding profit. Undistributed profit is called surplus, not set aside for any purpose. Okay, how do I find it out? Last year profit and loss account, which will be there in the trial balance. Suppose 1 lakh rupee is there in the name of profit and loss account in the trial balance, credit side 1 lakh. You take that as a base. Plus current year profit, what you found out just before in the P&L account statement. Profit after tax. Suppose assume that is 2 lakhs. 1 lakh was there in the trial balance. 2 lakhs, what you found out in the P&L account, total profit is going to be 3 lakhs. How much you transferred from the current year profit to the general reserve? 20,000. 20 or 10? 10, okay, 10. 10. That you minus it. So how much is going to be the surplus now? 1 plus 2 minus 10,000. So 3 lakhs minus 10,000 is equal to 2 lakh. 90,000 is going to be the surplus alone. How much you already found out as reserve? 30,000. 30 plus 190 is equal to 220 will be recorded under the name of reserves and surplus. Keep in mind, while we are doing, little more clarity will come. It's simple. There are 2 items in this. One is reserve and another one is surplus. I'm telling you first reserve. Okay. I'm telling you first reserve. Not able to listen? Anything problem? Okay. But now there was no. Okay, fine. So reserve is opening balance plus current year transfer put together is called reserve. In trial balance, you are finding out some amount. Say for example, 20,000 as reserve. Is that clear? We don't have anything on that. It is given. Last year closing balance of reserve is 20,000. It's working. Okay, no problem. No, okay, fine. Listen, sir. 1 second. Last 1 more minute we'll take and go for a break. See, there is a trial balance. From that only we are taking each and every item. In the trial balance, there is an item called general reserve. How much it is there? 20,000 it is given. In the credit side of the trial balance. You take that as a base. Clear? 20,000. In the adjustment, the company may have a policy and that will be written in the adjustment. Transfer 10,000 rupees from the current year profit to general reserve. Originally, how much was the general reserve? 20. Now, how much you are adding? 10.
10.
Total reserve should be 30.
30.
Clear? So that is called reserve. Okay. Now, surplus. How do I find out surplus? Then I will add this together. Now 30,000 rupees is there in the name of reserve. Keep it aside. Now I want to know surplus. Then I will add these two together. That amount only will come here. Right? Okay. How do I find out surplus? Surplus is nothing but profit. Already you found out a profit in your P&L account. Assume it is 2 lakh rupees. Assume. You will find out. Assume it is 2 lakh rupees. In the trial balance of the given question, in the trial balance, last year balance sheet, there is a P&L account, no. There is a surplus, no. That will be given in the trial balance in the name of profit and loss account. Assume that is 1 lakh rupee. 1 lakh rupees P&L account in the trial balance. 2 lakh rupees the profit of the current year. So total profit is 3 lakhs. From the total profit, how much I was told to transfer to general reserve? 10,000. That I already did it. Okay. So the 10,000 will be minus from this total profit of 3 lakhs. So it will become 2 lakh 90,000 in the name of surplus.
Surplus.
Already I have a reserve of 30,000. So 30 plus 290 is equal to 320 will be written in reserves and surplus column here. Okay. Is it clear? While we are doing it, little more understanding will come. No problem. Okay. So like that, next one, non-current liability. I think it's almost time. We can go for a break and we can come and discuss this and we can do one more problem. Okay. Right? Is it that okay? Those who are online, 10 minutes break.
Okay, sir.
Okay, sir.
ತಗೊಂಬಾ ಬಾಟ್ಲ ಏನ 20 ರೂಪಾಯಿ ಬಾಟ್ಲಿ ಕಿಮ್ಮತ್ತಿಲ್ಲ ನೀವು ನೀರ್ ಕುಡಿದ ಬಿಟ್ಟಿಲ್ಲ ಮಟನ್ ಸಿಕ್ಕಿಲ್ಲ ಅಂತ ಹೇಳಿ ಇನ್ನು 1 ತಾಸು 4 ಮುಗಿದೆ Press the bell icon on the U. ಸುಂದರವಾದ ಇನ್ನೊಂದು ಮಗುವನ್ನ ನಾನು ನೋಡಿದ ಖಂಡಿತವಾಗಿ ಜಹಾಪನ ನನ್ನ ಜೀವನದಲ್ಲೇ ಇವರಿಗಿಂತ ಸುಂದರವಾದ ಇನ್ನೊಂದು ಮಗು ನಾನು ನೋಡ್ಲೇ ಇಲ್ಲ. ನನಗೆ ಖಾತ್ರಿ ಇದೆ ಯುವರಾಜರು ಬೆಳೆದು ನಿಂತ ಮೇಲೆ ಹಲವರ ಚಿತ್ತಚೋರರಾಗ್ತಾರೆ ಅಂತ. ನಿಜವಾಗಿ ಅವನು ಅದನ್ನ ಮಾಡ್ತಾನೆ. ದೇವರು ನಿಜವಾಗಿ ನನಗೆ ವಿಶ್ವದಲ್ಲೇ ಅತ್ಯಂತ ಸುಂದರವಾದ ಮಗುವನ್ನ ದಯಪಾಲಿಸಿದ್ದಾನೆ. ಬೀರ್ಬಲ್, ಏನಾಯ್ತು? ಯಾಕೆ ಸುಮ್ಮನಿದ್ದೀಯಾ? ಏನೂ ಇಲ್ಲ ಜಹಾಂಪನ, ನನ್ನನ್ನ ಕ್ಷಮಿಸಿ. ನನ್ನ ಮನ ಬೇರೆ ಎಲ್ಲೋ ಹೋಗಿತ್ತು. ಬೇರೆಲ್ಲ ಹೋಗಿತ್ತು? ನಮ್ಮ ಯುವರಾಜನ ಸೌಂದರ್ಯದಿಂದ ನೀನು ಮೋಹಿತನಾಗಿಲ್ಲವೇ? ಅಥವಾ ನಿನಗೆ ಅವನು ಸುಂದರ ಅನ್ಸೋದಿಲ್ವೇ? ನನ್ನನ್ನ ಮತ್ತೊಮ್ಮೆ ಕ್ಷಮಿಸಿ ಜಹಾಪನ. ಯುವರಾಜರು ನಿಜವಾಗಿ ಸುಂದರವಾಗಿದ್ದಾರೆ. ಹಾಗಿದ್ರೆ ನನ್ಗನ್ಸುತ್ತೆ ಯುವರಾಜರು ವಿಶ್ವದಲ್ಲೇ ಅತ್ಯಂತ ಸುಂದರ ಮಗು ಅಂತ ಬೀರ್ಬಲ್ ಒಪ್ಕೊಳ್ಳೋದಿಲ್ವೋ ಏನೋ? ಹೌದು ಬೀರ್ಬಲ್, ಹೇಳು, ನಮ್ಮ ಯುವರಾಜರ ಸೌಂದರ್ಯದ ಬಗ್ಗೆ ನೀನು ನಿಜವಾಗಿ ಏನನ್ನ ಯೋಚಿಸ್ತಾ ಇದ್ಯಾ ಅಂತ? ಜಹಾಂಪನ, ಪರವಾಗಿಲ್ಲ ಹೇಳು ಬೀರ್ಬಲ್, ನಿನ್ನ ಮನಸ್ಸಿನಲ್ಲಿ ಇರೋದನ್ನ ನೋಡಿ. ಅದು ಜಹಾಂಪನ, ನಮ್ಮ ಯುವರಾಜರು ನಿಜವಾಗಿ ಸುಂದರವಾಗಿದ್ದಾರೆ. ಆದ್ರೆ ಏನು? ಮಾತಾಡು. ಜಹಾಂಪನ, ಯುವರಾಜರು ವಿಶ್ವದಲ್ಲೇ ಅತ್ಯಂತ ಸುಂದರ ಮಗು ಅಂತ ನಾನು ಒಪ್ಕೊಳ್ಳೋದಿಲ್ಲ. ಜಾಂಪನ, ನನಗನ್ಸುತ್ತೆ ಬೀರ್ಬಲ್ ನಮ್ಮೆಲ್ಲರಿಗಿಂತ ವಿಭಿನ್ನವಾಗಿರೋದಕ್ಕೆ ಪ್ರಯತ್ನಿಸ್ತಿದ್ದಾರೆ ಅಂತ. ಬೀರ್ಬಲ್, ಎಲ್ರು ಅಷ್ಟು ಹೊಗಳ್ತಿರುವಾಗ ನಮ್ಮ ಯುವರಾಜರು ಅತ್ಯಂತ ಸುಂದರ ಮಗು ಅಂತ ನೀನು ಒಗ್ಗಟ್ಟೆ ಇರೋದಕ್ಕೆ ನಿನ್ನ ಹತ್ರ ಸರಿಯಾದ ವಿವರಣೆ ಇದ್ರೆ ಸರಿ ಹೋಯ್ತು.
Okay, can we resume? Those who are online, can you hear me?
Yes, sir.
Okay,
Yes, sir.
fine. So we understood how do we record reserves and surplus. Then the second item under the equity and liability is non-current liabilities. Non-current liabilities. Non-current liability means long-term liabilities. Okay. Example, bank loan, long-term loan, debentures, etc. Okay. So we have non-current liabilities under that point number A, long-term borrowings. Long-term borrowings. Okay. Mainly it includes debentures. 6% debenture, 9% debenture. These words you can find it in the trial balance. Yeah, bank loan. Bank loan. That's long-term loan. Normally, bank loan is long-term loan. Okay. Debenture means borrowing from the general public by issuing a document. Sorry. Share is written in the capital, no, share capital. Okay. It's a borrowings. Borrowings. We are borrowing money from general public. For that, we are giving some interest. That need to be evidenced in a document. That document only we call it as debenture document. Debenture deed. Public can not LLP. What is LLP? Companies. Yes. Yeah. You don't know that? No, banks are giving loan. Banks are giving loans. For that, we have to go to bank. But here, the public is coming to you, not all the time. It's like in IPO, they can issue debenture. It's also called IPO. Okay. In IPO, they can issue debenture. You are buying it. Later, you can sell to anyone else. Just no, IPO is a process in which you can sell debentures. Initial public offering is called IPO. What does it mean? I was so far closely held company. Closely held company. Now I am allowing others also to invest in my company. I am becoming a public company. So far I was a private limited company. Now I am going to become a public limited company. How do I become a public limited company? I have to invite general public to invest in my company. That investment can be in the form of equity, or it can be in the form of preference share, or it can be in the form of debentures as well. Okay, you will study this in the next semester. Corporate finance, the various sources of finance that a company can mobilize. Okay. Right. So debentures and bank loan will be recorded. If it is there, it will come here. If it is there in the trial balance, we have to bring it here. Clear? Right. Next one is current liability. Point number 3 is current liability. Point number 3 is current liability. Short-term liabilities. Example, trade payables. Trade payable includes two things. One is sundry creditors, another one is bills payable. We have borrowed, we have taken goods from supplier, but we have not paid money. That is called sundry creditors. If you have given any bills payable, that also will come under here. Trade payable includes two things. One is bills payable, another one is sundry creditors or trade creditors. Some book they will call it as trade creditors. Some author they will call it as sundry creditors. Oh, yeah, sundry creditor is just a people, just a company. Okay, bills payable means that company is asking you to give it in evidence, give it in writing. Suppose you are buying some goods from X Limited. You did not pay. That X Limited is going to be your one of the sundry creditors. X, Y, Z. 3 suppliers are there for you. From three of the companies, you bought some goods. You did not pay still. You are going to pay in the future. So all the 3 people are collectively called as sundry creditors. Okay. Now among these 3, X is not believing you. X is asking you, please come here. You have to sign in this document. What is the document? The document is talking about bills receivable, bill of exchange. This much money you are owing to me. you have to give in this and date. Condition, everything is writing, and he's asking you to sign. Then that document is called as for you, for us. For him, it is bills receivable. In his balance sheet, you will write that under current asset. In our balance sheet, you will write it under current liabilities. In this case, out of 3 members, one is asking like this, that one will come under bills payable, other 2 will come under sundry creditors. But in this case, trade payable means both together, 3 together only trade payable. Okay. Next. Sorry? Salary? Yeah. Salary? 1 second. Salary payable. Payable will come under next one. Other current liabilities. Other current liabilities. Salary payable. All payables. All outstandings. Yeah. Yeah, that's not outstanding actually. Trade payable is not just outstanding. Trade payable is a contract. Because you've taken goods from them, you have to pay. But these are all from the very nature of the business. I mean, salary has to be paid. You did not pay. That's why it's outstanding. In bills receivable payable and the trade payables, due date will be 30th August. But today you show it as a current liability only. It's not outstanding. After that, it's there. That's outstanding. But that also we don't call it as outstanding. Outstanding means payable for expenses. Payable for expenses. Okay. Telephone charge outstanding, electricity outstanding, rent outstanding, interest outstanding, wage outstanding, salary outstanding, all these things. What bill? Utility bill. Utility bill. Bills payable. Purchase bill is different from. There's nothing called purchase bill. What is called purchase? No. What is purchase bill? There's nothing called purchase bill in accounting. It is invoice. It is invoice. Bill means bill of exchange. In accounting, bill means bill of exchange. In colloquial language, you say bill is invoice. But here two clear term. Invoice and another one is bill of exchange. Okay. No problem. Only trade payable. Even throughout the life you are not paying, it is only trade payable. Clear? So that's what I'm telling you. Outstanding is only for expenses, utility bills, and other salary, wage, electricity, insurance, all those things. Okay. If you don't pay insurance, you can't get the insurance coverage. If you don't pay the wage for 3 months, then 4th month your employee may not turn in. That kind of things are. That's why it's called outstanding. You have to look into that. But here, what is the problem? No problem is there. We are in the upper hand actually. We've taken the goods from our supplier. Okay, we have taken the goods. We have to pay. Yes, we'll pay. Most to us, what will happen? That's it. No problem. We'll go to the next supplier. We'll explore different suppliers. That's all. But probably he may call other supplier and tell. We'll put in WhatsApp group. Supplier group will be there. No, this teacher is not good. He's not teaching well. You are putting likewise. They will put this customer is not a prompt, not in prompt payment. Okay, please deal with care, something like that. Okay. Or bank guarantee might have been taken. That time the bank will not give you further guarantee for you. All those things are part of business. Okay, you cannot just, government is expecting 4 lakh 85 crore, correct? That's 5G. Government is expecting 4.85 lakhs crore we are expecting. But people are forming a cartel. You ask me 1 lakh, I'll ask for 1.1 lakh. How the government can give 4.85 lakhs? Finally, government was defeated. That's it. 2G, how much we talked about 2G? 5G, no G is talking. All the G's are keeping quiet. There was one G, no? CAIG. You know CAIG? Controller and Auditor General of India. CAIG. CAG, Controller and Auditor General of India. How much he was talking? Now 5G. So nobody is talking. Okay, that's estimation. Notional, that's called what? Notional loss. Estimate X amount, realized is Y amount. The difference between these two is called notional loss. Okay. Come back to this. I think we have to finish it. Next one is non-current assets. Yeah, the liability is over. Now, next point number 2, Roman letter 2 is asset. Before that, you write a total also. Total of equity and liabilities. Total of equity and liabilities. That part is over, right? That part is over. Next, point number 2, Roman letter 2 is assets. Under that, point number 1, non-current asset. Non-current asset. Non-current asset. Under that, point number 1 is fixed asset. Don't copy there. I'll tell you what I'm. Yeah, fixed asset. Don't copy from there. I'll tell you, write it. Fixed asset. First one is non-current asset. Under that, point number 1 is fixed asset. Under that, point number A is asset, non-current asset. Under that, fixed asset. Now, under that subcategory, tangible asset. Point number A, tangible. I repeat it. Heading is asset. Roman letter 2 is asset. Under that, point number 1 is non-current asset. Under that, point number 1 is fixed asset. Under that, point number 1 is tangible asset. Under that, no, not under that. The second one is intangible asset. Intangible asset. You remember now what is tangible asset and intangible asset? Intangible assets are nothing but goodwill, copyright, patent, trademark, etc. What do you want to value? What do you want to value? How do you put? Okay. How do you put all the previous amounts? Have you valued? Our job is to value? No. What is our job? Copy from? Not from neighbor's paper. Copy from trial balance. So goodwill value will be there in the trial balance. We are going to appropriately write it. Everything is there in the trial balance. Just we are classifying and writing in proper places. Some items are recorded in P&L account. Some are going to be recorded in balance sheet. 2, income and expenditure P&L. Equity liability asset is in balance sheet. That also in the format. Equity liability asset only. But that is in the step-by-step format. That's it. Goodwill will be there in the trial balance. How much is there? Please take it. Check for the adjustment. They may say like this. Write off 10% of goodwill. Suppose goodwill is there 5 lakhs. Where? Trial balance. Debit side 5 lakhs asset is there. Adjustment, they are telling you one sentence. Write off goodwill 10%. What does it mean? It mean you have to reduce 10%. 5 lakh was there. It should be now in the balance sheet 450. Where will that 550 will go? Adjustment, P&L account, amortization. There was one heading, depreciation and amortization. There you have to write this 50,000. That's all over. Yeah? Everything like that only. Nothing. We don't even think outside the trial balance. Only within the trial balance. And that adjustment. That's all. When you have to value goodwill, since he asked, when we have to value goodwill, who will value goodwill? Yeah, selling time only or buying time only. Suppose I'm going to sell my company, somebody is going to buy this. That time they have to value goodwill. Otherwise, no valuation is taken. Then you can wonder, sir, then how this 5 lakh has come into the trial balance? Who has written it? Accountant has written it. On what basis he has written it? Simple. You remember one of the class I told you. A company which is having a goodwill is good or bad? You don't understand me. I will always tell it is bad. Just now you asked me, your class or that class, I don't know. Dividend, giving dividend is good or bad? Just now only? Yeah. Giving dividend is good or bad? Bad, I told you. Similarly, having goodwill, you may wonder that, sir, what is this? You are telling everything negative side. Goodwill, you understand it's the reputation of a business. Yes, true. But reputation of business is not good for the business. Sir, what is this? Illogical. Simple. You are buying a business by paying more amount, thinking that that company is having a reputation in the market. You bought it. 5 lakh worth of business, you are buying it for 6 lakhs. That 1 lakh is called goodwill. The entry is business purchase account debit or all asset account debit to all liabilities account debit of that company. You take some XYZ asset, ABCD liability from that company, running business. The difference between assets and liabilities should be the price what you're paying. That is 5 lakhs only, but you're paying 6 lakhs. Asset account debit, liability account credit to bank account, what you are paying. 6 lakh is paid, but there is a difference of still 1 more lakh. That 1 more lakh you are writing as goodwill account debit 1 lakh. This is how goodwill comes into the books of account. Who has valued it? Not the accountant. Who has valued it? You are the accountant of the buyer only, no? Then who is valuing it? The top level management. Some experts will be there. They will value. They take a decision. Yes, this company is worth to buy more than 1 lakh rupees. Pay 1 lakh extra. Because it's an ongoing business. Buy it. Still that 1 lakh is sitting in your balance sheet means after 5 years also it is still sitting there. What does it mean? You were not able to generate more profit to write off the goodwill amount in the 5 years. So it is bad about the company. In this way, I'm telling you. Okay, next. Non-current asset. Under that, fixed asset. Under that, point number 1 is tangible. Point number 2 is intangible. Then point number 3 is non-current asset. Non-current investment. Non-current investment. Non-current. This non-current investment is not C. Non-current investment is point number 2. Fixed asset. Once again, fixed asset we have now. Fixed asset. If you given number 1 for fixed asset, you have to give number 2 for not intangible. 2 for non-current investments. See, non-current asset is of 2 types. One is fixed asset and non-current investments. Okay, non-current investments. What do you mean by non-current investment? 1 second. What is non-current investment? Long-term investment in other companies. Fixed deposit you made in a bank or other companies, debenture you bought it. Okay, any kind of such non-current investment, long-term investments. You can't take that money immediately. You are having some lock-in period of 2 years, 3 years, 5 years like that. That's called non-current investments. Yes, sir. Tangible. Whichever are tangible. Land and building, motor vehicle, motor vehicle, motor car, machinery, plant, equipments, furniture, computer, etc. Yeah, tangible, all tangible assets. Tangible fixed assets. That's what the heading is, fixed asset. Under that, tangible. Furniture, car, okay, everything. Next, point number 2. If you're given point number 1 for non-current asset, now you give point number 2 for current assets. Current assets, these 2. This one, then yes, correct. Point number 2. This one is these 2. You have to write it here, double I. Here you write it, double I. There you cut it. Here you write number 2. Correct? No, these 2. Yeah. 2 is what? 2 is current asset. 2 is current asset. 2 is current asset. Under current asset, inventories, trade receivables, cash and bank balances. Inventory means stock. Stock of work in progress, stock of finished goods, stock of raw material and stock in trade. We have 4 now, depending upon the company. If you are only manufacturer, you will have 3. What are the 3? Raw material, work in progress and finished goods. If you are a trader, you will have only 1, stock in trade. If you are both, all the 4 will be there. Inventory. Then trade receivable, bills receivable and sundry debtors put together, we call it as trade receivable. After that, cash and bank balances. Before that, write one more thing. After trade receivable, write one more thing. Other current assets. Other current assets. Other current asset means prepaid expenses, prepaid insurance premium, prepaid rent, prepaid electricity bill. Anything prepaid will come there. Other current assets. Last one is cash and cash equivalent. Yeah, prepaid. Yeah, point number 3 you can take. Point number 4 is cash and cash equivalent. then total of asset. Total of asset. Now already you have a total of equity and liability. Now we have a total of asset. Both should be one and the same, equal. That means your accounting equation is satisfied. What is accounting equation? Asset should always be equal to the total of asset value should always be equal to the sum total of liabilities and equity. So in the first portion of this balance sheet, we talked about liability and equity. We took a total. That total should be equal to the second part of the balance sheet total, that is asset. That's all. Asset can be, yes, asset can be more than equity, and asset can also be more than liability. But asset can never be more than equity and liability. Am I making sense? Asset can be more than equity. Separate sentence. At the same time, asset can be more than liability. But asset at any given point in time of any business can never be more than liability and equity. Yes. Yes, it should be equal. That's what the accounting equation says. No, it cannot be more or it can be less. I think you're confused. Yeah, that is what. That's accounting. A is equal to B plus C. That's all. Forget about accounting. A is equal to B plus C. At any given situation, it is a true equation. A is equal to B plus C. Can B be more than A? Not possible. Accounting equation, mathematics. A should be more than B and C. Separately, individually. Yeah. Combinedly, no. Combinedly, no. If it is combinedly, yes, that's not an equation. Okay. Why this is true? Why this is like this? Why I'm telling you this much authoritatively? Not just reading, by understanding. Why it is so? Double entry bookkeeping. Whenever you write an entry, you are writing 2 times. The amount you are writing 2 times. One of the classes, one of the engineers asked me, sir, buying goods for 10,000, what's the entry? Purchase account debit to cash account 10,000, 10,000. He was asking me, sir, how much you bought goods? 10,000. Then why are writing 2 times 10,000, 10,000? Because of that only, accounting equation is always true. Okay. Why? Because double entry bookkeeping. That's why I'm writing 2 places. One is cash goes out, for that one record. Goods are coming in, for that another record. That's why purchase account debited, cash account credited. I should know how much cash has gone out. I should know how much purchase has increased. That's okay. I think it is fair understanding of balance sheet as well as the profit and loss account. We'll take only one question. I think we are running short of time, but anyway, we'll rush. We understood this format very clearly with so much of explanation. So there is no much explanation needed when we are doing the numericals. I'll take one question which comprises of lot many items to be covered. Okay, then it is easy. Yeah, look at this question. Illustration number. Yeah, Haria chemicals we take. Yes. Illustration number 6. Okay, I will share this document with you in the LMS, so you can refer the question from there. We can just try to find out the answer. Okay, just to take 1 minute time to read and understand the numbers given to you or the details given to you. Those who are online, can you see the question displayed on the screen, right?
Yes, sir.
Yeah, just to go through that for a minute and I'll tell you how to solve it. There is a company called Haria Chemicals Limited. Okay, with this word only we can understand whether it is a partnership or a joint stock company or it is any other form of business ownership. Suppose if it is Haria Chemicals Enterprises, that can be a partnership or that can be a sole trader also. Okay, if it is clearly to be known as partnership means they will write and sons and brothers and sisters also there. Maybe. Okay, Usha and sisters. Ravi and brothers. All these things are called partnership firms. We have to understand from the name. Partnership firm. Okay. Usha Enterprises. It can be also be a partnership or it can be a proprietorship also. Usha Enterprises Limited. It should be a joint stock company. Okay. So from that you have to understand what type of form of ownership it is. Okay. Now what is given to us? Trial balance is given to us. Debit side amount, then credit side items and amount. Okay. And we are given with some more information down, that is adjustment. Yeah, luckily we have only one item, closing inventory. Okay, closing inventory is there. When we are asked to prepare, look at this. Please, before answering in the exam, read the question 1 or 2 times. If you are not able to read, just ask the exam somebody who is there in the hall. Sir, I cannot read it. Can you please read and tell me for me? After that, try to answer. Why I'm telling this is, for this question, many people in the previous years, they pause a journal entry. Look at this, point number 1, inventory. They're writing inventory account debit to cash account. That is completely wrong. Already that everything is done, it has come to trial balance. Again, you are going back to the first. No. Okay, so please, for this, you have to prepare P&L account and balance sheet. Okay. Now, trial balance is there. Adjustment is there. We have to prepare P&L account and balance sheet. Can you open the P&L account now? Yeah, profit and loss account of Haria Chemicals Limited for the year ending 31st March 2021. For the year ending 2021. Answer is also there. You can see, but you have to understand. Okay, you are taking this statement now. Particulars, note number, amount. What you have taken in the format, we are going to write the same thing with some appropriate figures for this company given from the trial balance. Okay. So this format should be memorized by you. You have to remember this. Revenue from operation. Revenue from operation. How much is there in the question? Sales. Revenue from operation means what? Sales. So go to trial balance. Okay. Income will be in the credit side. Expenditure will be in the debit side of the trial balance. Right? Asset will be in the credit, sorry, debit side of trial balance. Liability will be in the credit side. Right? Equity will always be in the credit side of the trial balance. Balance sheet does not have any debit side or credit side. Only one after another it is there. Okay, there is no side. Okay, look at this. Sales. I told you it should be the credit side. No, so it is credit side. This side is credit side. Okay, to my right is credit side. Am I right? To my right. No. If you see, starting from equity, that is credit side. Okay. So what is there? Sales is how much? 40 to 68. Bring it to the P&L account. 40 to 68. It is clearly given there, so we are taking it. There is no returns, so we take right directly. If it is there, you have to minus and write it. Next one, other income. Apart from sales, any other income is there. Go to credit side of the trial balance and just check it. Equity share, not an income. Debenture, not income. Bank loan is, what is that? Bank loan is liability. Trade payable is a liability. Sales already taken. Rent received is a income. Wait. Rent received is an income. Transfer fee is also income. Profit and loss account is not income for this year. Okay. Depreciation is not an income. So only 2 are there. 10,000 plus 46. Total is equal to 56. You bring it here, 56,000. Okay. So for that, you can write a note. Other income. Rent received 46. Transfer fee 10,000. Total is 56. Okay. 56. Other income is equal to 56. If you don't know, please write it in bracket 46 plus 10,000. So wherever there's an addition, it's back. Yes. Wherever there is a plus or subtraction, you have to do it in the note. Yes. Okay. And also note number 1 starts from the first item of balance sheet. Suppose 8 items are there as a note in the balance sheet. First item in the P&L account should start with number 9. But how do we know, sir? First we are preparing P&L account. So what you do is you prepare a note without number. You prepare note accordingly. Keep on going. After closing it, you just start writing the numbering. First one is share capital, like that number. Otherwise, all item you number it. All item. In the format itself, you number it. Whether it is having plus or minus, you number it. No problem. Okay, anyone you follow, whatever they want. Next. Total income. Total revenue. Total revenue. Total revenue is 43 lakhs 24,000. Next side heading is expenses. 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 How much expense is there? We have to take one by one. What's the first item expense I told you in the format? Cost of goods. Sorry, cost of materials consumed. Cost of materials consumed in this question. Check the trial balance. Check the trial balance. Debit side it will be there. Material consumed 2319. 23 lakhs 19,000 is there. Look at this. 23 lakh 19,000 I written here. 2319. Second one, purchase of stock in trade. In this question, it is not there. So I'm not writing it. If you write and leave it as also, no problem. Okay. Yes. Next one is change in inventory. Change in inventory. Change in inventory. How do you find out change in inventory? Opening stock of all inventory minus closing stock of all inventory except raw material. Except raw material. Okay. Look at this question. In the trial balance, do we have any opening stock of inventory? Opening stock of inventory 6,80,000. The first itself is there. Inventory 6,80,000 is the opening stock. The inventory given in the trial balance is opening. The inventory given in the adjustment is closing. Okay. So 6,80,000 minus how much? 8,23,000. That is closing inventory. Closing inventory. Okay. Write it this difference. What is the difference now? 6,80,000 minus 8,23,000 minus 1,43,000 is written here. Minus 1,43,000. Write minus, or you can write it in bracket. Okay. Next, employee benefit expenses. Employee benefit expenses. Look at the trial balance and find out all those items which are relevant to employee benefit. Salary, wage, bonus, etc. Look at this. It will be in the debit side. So debit side, inventory, furniture, discount, loan to director, advertisement, bad debt, commission. Commission to whom? You will pay to your employee? Yeah, sales commission also, will you pay to your employee? Yes. If it is so, you have to take it. Suppose you have a sales force, beyond certain level he is selling, or for every sale also you may pay. It depends upon the contract of employment. Okay. What is the basis of remuneration? If we sell this much percentage, in addition to that, some base salary will be there. Okay. If it is so, you have to take it. Otherwise, no. You have to ask what commission it is. But here, to whom ask? We have to assume. We have to take a call. Whether it is to employees in addition to their salary. Okay. But normally we have to assume like that only, no. Commission. If it is a commission given to third party to take some service. Okay. Commission. That may not be coming under employee benefit expenses. If it is given to our own employee, it will come. Okay. Then you have to take a note. it is considered to be a commission paid to employees. Okay. Next, what else is there? Clear cut one. Oh, that's okay. 9 lakhs. Yeah. Rent, current account, cash, interest, preliminary expense, wage is there. 9 lakhs. You have to take that. Then only that much is there. Yeah. So come to balance sheet. Sorry, come to P&L account. Employee benefit expenses only 9 lakhs. So that commission is taken separately. Okay. So commission can be included in other expenses normally. Other expenses. Okay. Right. So employee benefit expense is over. Next one, depreciation. But we don't have depreciation in this question. So we are not writing it. Next, finance cost. What is finance cost? Interest. So you take interest. How much is there in the trial balance? Go to trial balance and check it. 1 lakh. 16,000 is on bank loan. Any debenture interest is there? 55,000. So total, how much? 1 lakh 71,000 is the interest. Finance cost. 1 lakh 71. Clear? Any doubt? Okay. Next one is other expense. So now we can see all the items in the trial balance which are relevant to expense column, but not into any of the previous category. All those will come under other expenses. Can you see one by one? Look at the trial balance. Yeah. Distribution freight. We have not taken. Now we have to take 54,000. Okay. Trade expenses 37,000. Transit insurance 30,000. Dealers aids 21,000. Consumables 84,000. Then what is it? Dealer ID, dealer aids means what? What do you mean by dealer aids? We have to ask that accountant why he has kept that account name dealer aid. But generally it is meaning helping the dealers. You are helping the dealer by spending some money, maybe facilitating them to get our goods to their place. They are dealing in our goods. We are sending the goods to them. We go there and supply, or some other expenses for them. Maybe a tour you can, but aid is there. It's not just dealer expenses. Aid means what? Some help in the trading activity. Yeah, maybe you are helping them for our business. Consumables. Okay. Tools and equipments asset, no. Equipment is a fixed asset, right? Okay. Then this commission, bad debt, discount. Okay. So I'll take you to the list. Yeah. Consumables, preliminary expenses, bad debts, discount, rental. There is one rental debit side in P&L in the trial balance. Commission, advertisement, dealer aid, transit insurance, trade expenses, distribution freight. All these things put together, it is totaling to 4,76,000. That should be written in other expense column. Clear? Sorry. All items should be there either in trial balance sheet as well as in the P&L account. For that I told you logic, right? P&L account, income and expenditure. Balance sheet, equity, liability, asset. So now we are talking about only income and expenditure. Now this all expenditure. Okay, total is 4,76,000. Yeah. What is the doubt? Trial balance is this. Okay. So next is total expenses. Any other expenditures there? Other expenditure, last one. Take a total of all the expenditure. Write it total expenditure, total expenses. Total expenses. Take the total of only the expenses column. How many are there? 5 are there, 5 items. Right? One is minus, remaining all plus. Total the plus, minus the minus. Tell the answer. 3 lakh 37 lakh 23,000 is the total expenses. 23 is the total expenses. Now what to do? We have to minus the total expenditure from total revenue. Yeah, income. Minus it. Next line, you write it after total expenses, you write it profit before tax. Sorry. Yeah, if anything is there, you have to minus the tax after finding out the profit before tax. Yes. But here in this question, it is not given. So we are not taking it. Yeah. Which one? That in this question. Only one thing is there, that is closing stock adjustment. Only one adjustment is there in closing in the question. Only closing stock that we already taken now. Where we taken to calculate the change in inventory. Yes. The same thing will go to current asset in the name of inventory. The closing inventory should be recorded in two places. One place we already considered. Where we considered to calculate the to calculate the change in inventory. One more time, we have to consider the closing inventory while writing the balance sheet, while preparing balance sheet under current asset column in the name of inventory. Okay. So profit before tax is equal to how much? 6,01,000 minus provision for tax 0. Because it is not given, so we are not taking it. Don't think that there is no tax. Okay, tax will be there. It is not given here academically. We don't have that, so we are ignoring it. Yes. I have shown you one diagram now. Financial statements. 5 I shown you. One of the statement is notes to accounts. Yeah, required. Why you don't want? Then how do I know that how much? Suppose other expense 4,76,000 you are writing. You are calculating and writing. You are copying and writing. How do I know? Okay, if you are copying and writing, you have to write note also. That is a true accountant. You have to write both. No. You have to write separately and note. Standing instruction. You have to write separately, note also. Even 2 items are added, you have to write a note. Only one item is there, no need of note, directly you can write it. Okay. Not only for correction, but it's the same process in the companies. Next, provision for tax 0, profit after tax 6,01,000, same amount. Next, you start balance sheet. Open the balance sheet. Open the format of balance sheet. Balance sheet of so and so company. Yeah. As on. When you are writing balance sheet, you have to write as on or asset. As at. When you are writing P&L account, you have to write for the year ending or for the year ended. That's the usage. Balance sheet is for 1 day. Not even 1 day, 1 moment, 1 second. Okay. While you are preparing a balance sheet, somebody might have transferred money to your account. So that is not captured in the balance sheet. Every second, your position will change. It's current actually. But P&L account remains constant for that particular year forever. Next year, P&L account will be different. But for that year, full year, that's only P&L account. So that's called for the year ended. This is called for on a particular time. As on, yes, as on. Okay, next. Take a format, particulars, note number, amount. Particulars, note number, amount. Yeah, note number means how to number it. Actually, we are preparing first P&L account. There are some number required for note. So we are not giving that note number 1, 2, 3 from P&L account. We have to give number from balance sheet. The first item of balance sheet should be numbered as note number 1. Equity and not equity and liability. Equity and liability is heading. Share capital is the note number 1. Share capital is note number 1. Reserves and surplus is note number 2. Like that it is going on. The last note number of the balance sheet, if it is 8, the first note number of P&L account should start with 9. For that, what you do? You just prepare all the note without number. Close everything. Then you start numbering the notes from the balance sheet 1 to 3. Okay, next. Equity and liability. Equity and liabilities. Equity and liabilities. Under that, first one is share capital, shareholder fund, actually. Shareholder fund, then share capital. Yeah, he has not written like that. Share capital. Is the same question or different question? Yeah, shareholder fund. Under that, share capital. Just to copy this. Share capital. How much is given the trial balance? Go to trial balance and check it. Trial balance. How much capital? Look at this. 25 lakhs. How these 25 lakhs? You have to give it in the notes. How many shares? One share is what is the face value? What's the face value? In this case, it is given face value is how much? 10 rupee. How many shares are there? 2,50,000 into 10 is equal to 25 lakhs. That you have to write in the note. 25 lakhs. Next, point number 2. Reserves and surplus. Reserves and surplus. What was the profit of the last year? 1,39,000. Plus current year profit how much? No. Sorry, 6,01,000. Okay, add it together. That's the total profit, total surplus. In that, any reserve you are asked to transfer? No, you don't have any reserve to transfer. So you can write it here, reserves and surplus 740. Suppose they are telling you to transfer something. In this question, there is no reserve at all. Only surplus is there. There is no item in the trial balance called general reserve or capital reserve or any reserve. So we don't worry about that. If it is there, take that. And the current year, anything you are asked to transfer, add that. That becomes a reserve. Okay, how much you transferred from current year, you minus from current year profit. Rest amount you add with the previous year profit. The total is called as surplus. That total and the new addition of reserve. New reserve, old reserve plus new reserve together is total reserve. Add this with the surplus. That is going to be the reserves and surplus. Yes, but here nothing is there, so we are writing as like that. It is not creating, it's happening actually. Suppose a company does not have profit, we can't create a profit in the company. Okay, see, actually, simple understanding. Yeah, tell me. We are creating a profit and loss statement, but we don't have any control on how much is going to be the profit or how much is going to be the loss. It's just happening. That we are taking to balance sheet. See, you know the equation, right? Asset is always equal to liability plus equity. Equity includes profit also. Equity means if you decode equity, the amount introduced by the owner plus the amount earned by the company up to now in the name of profit available to owners. Undistributed profit. Suppose you given the profit means the same amount of what they introduced will be there. Okay, that is why. So balance sheet, actually why balance sheet comes first is through balance sheet also you can find out profit and loss. How do you find out profit and loss through balance sheet? It's very simple. Asset is equal to equity plus liability, right? I just now told you equity means that's okay, but equity means if you decode equity, if you further micro level go to equity, equity is consisting of two parts. One is the original amount introduced by the owner plus or minus the loss or profit. Okay, so if you are having a balance sheet, it won't tally without profit or without loss. You are writing all the assets one side, total debt. You are writing all the liabilities and the original capital introduced by the owner another side. Now the difference between the assets and part of the equity and full of the liability is equal to either profit or loss. If asset is more, it is called profit. If asset is less, the difference is called loss. Clear? Okay, that is why balance sheet is prepared first. Not prepared first. In academic, we are doing second. Okay, but in company display, the balance sheet is displayed first. Explanation for the reserves and surplus is the note. In the note, you are having one value of current year profit. No, for that explanation is P&L account. That's it. That's logic. Next. Yeah. Next one is what? Non-current liabilities. Quickly take it. Non-current liabilities. Yeah. Which one? Yeah. Question. Non-current liabilities means long-term liabilities. Go to question, trial balance. Liabilities will be in the credit side. So second credit side. Debenture loan is there. Debenture is there. And then, yeah, bank loan is there. Two items are there. 5 plus 6.45 is equal to 11,45,000. Look at the note number 3. It is written here. 11% debenture and bank loan of 6,45,000. Okay. What is this 11%? Interest. Okay. Next item in the balance sheet is current liabilities. Point number 3, current liabilities. Current liabilities, I think only one is there in this question. Go to trial balance and check it. Current liability will be there in the credit side. Only trade payables are there. How much? 2,81,000. I have written here 2,81,000. There is no more liabilities. So I'm taking the total of equity and liability. Next line. Total of equity and liability. 46,66,000. Okay. Next point number 2, Roman letter 2, that is assets. The second part of the balance sheet. Assets. Okay. Under that, it's non-current assets. Non-current asset. Under that, fixed asset. Under that, point number A, tangible asset. What are the tangible assets in this question, in this company? Go to trial balance. Asset will be in the debit side. Okay. Inventory is an asset, but it's not a non-current asset, non-fixed asset. Okay. Furniture is a fixed asset. Note down. Furniture, plant and machinery, fixtures, freehold land, tools and equipments. That's all right. So I'll take you to the note. You can, yeah, this is the note. Okay. And there is one item given in the trial balance as depreciation on plant and machinery. Provision for depreciation on plant and machinery. How much it is given? 1,46,000. That I have to minus from the value of plant and machinery. Okay. So this is the total value of all asset. Gross block. They will call it as gross block. The old usage. Gross block. Gross block. Okay. From this, I have to minus the depreciation of individual assets. Okay. So only one asset is having depreciation. That is 1,46,000. So 1,46,000 is minused from 31,51. 31,51,000. So remaining amount is, yeah, that you write it. This is pointer. Okay. Fine. So remaining amount, write it. Next one is intangible asset. Only goodwill is there, I think. Goodwill, intangible asset. Yeah, you take the goodwill. Goodwill. Intangible asset 2,65,000. 2,65,000. Next one, current asset. Sorry. Non-current investment is not there in this question. Yeah, so don't write. Next one, current assets. Current assets. Go to trial balance and check it. Current assets. Inventory is there. The closing stock. 8,23,000. When you are writing in the balance sheet, you have to write the inventory of closing, not opening. Today, what is the value of inventory? That's why. Okay. You are preparing on 31st March. So 31st March, what is the value of inventory? Next, trade receivable 4,40,000. Then cash and cash balances, bank balances. Look at the trial balance. There is a current account. Current account is there now, 45,000. And cash balance how much? 8,000. Total is equal to 53. So 53 is written here. Last one, short-term loans and advances. What is it? Short-term loans and advances? There is a loan given to director. Director himself taken loan from the company. So that is given in the format. What getting? Short-term loans and advances? No. Other current asset is different. If it is not given, you just take it in the format also. Short-term loans and advances. Short-term loans and advances. What you gave, that's why it's coming under asset. Suppose you taken short-term loan from somebody, that will come under liability, current liability. Yeah, under current asset, one of the side heading. Short-term loans and advances. Before cash and bank balance, it's better. And advances. Cash and bank should be the last item of current asset. Why? There is a concept called marshalling of balance sheet. Marshalling. What is marshalling? Ordering. There are two ways of ordering the items in the balance sheet. One is permanency order. Another one is liquidity order. What do you mean by permanency order? The most permanent one, you will take it first. Most permanent means what? Most illiquid form of asset. Land, you will write first. Slowly you will go to liquidity. Slowly you will go to liquidity. Last item is most liquid item. That's cash. Another way is just ulta, just opposite. Based on liquidity. Most liquid you will write the first one. But here we don't have option of writing because it is given by whom? The format is already given to us. By whom? Companies Act 2013. So we don't have the concept of marshalling here. They themselves marshaled and given. Sorry, sir. Same thing. There was an act called Companies Act 1956. That was followed up to 2012. That's simple. We don't leave you. Everything is governed under act. India is one country which is having enormous number of act. Okay, everything you say there is a act to govern that, but we don't know. We don't worry about that. Whenever the trouble comes, we just refer. Is there any law like that? Everything in India. University, we have a law act, right? University Act is there. Everything. You do whatever in India, everything is governed under act. Okay. So it is only for companies. Suppose you are a sole proprietorship, you can follow any one of the method, marshalling, liquidity basis or permanent basis. In America, what they will do in the T form of balance sheet or in T form of financial statement, they just do ulta. In the just driving also, no, what we do, keep left or right. Keep left in India, but in America it is keep right. Okay, same thing. In balance sheet, forget about this balance sheet. Normal business, sole trading business. Liability side, amount. Asset side, amount. It will be in a T format. Okay, that's for sole trading company. You should not do like that in our class. Suppose if you are a sole trading organization in India, we follow that. We don't follow like this. We follow T form of balance sheet. In America, if it is sole trading organization, they have a just ulta. First, they write the asset amount, then liability amount. We just have the reverse. Liability first, amount next, then asset, then amount. Okay, so that's a concept. In that, you have a marshalling of items. Permanent nature, longest liquidity to shortest liquidity. Otherwise, the reverse. Okay, now close it. What is it? Another one? Cash and cash balances. How much? 53,000. Yeah. Short-term loans and advances nothing but director loan 80,000. So total is 46 lakhs 66,000 total of assets. So this is how you have to prepare balance sheet and P&L account of a joint stock company. Is it the accounting equation comes true here? Okay, I told you in the very beginning, a balance sheet is nothing but a statement in which the accounting equation is written in a statement format. Assets written there, assets. Okay. Equity is written here. Shareholder fund is another word for equity. Shareholder fund is another name for equity or net worth. In this company, net worth of this company is how much? No. Net worth, that's the total worth. What you are reading is 46, 66 is the nothing but total asset, total worth of the company. What is the net worth of the company? What is net worth? Total worth minus 0. Total worth is 46, 66. What do you mean net worth? You have to minus something. That's for sure. That's for sure. No. Gross minus something is called net liabilities. So 46 lakh 66,000 of asset minus liabilities. Otherwise, only shareholder fund total is called as net worth or equity. Equity is nothing but net worth. The another word of equity is net worth. Don't confuse the word equity share capital. That's different. If you talk about equity share capital, that's only 25 lakhs in this company. Equity share capital, only 25 lakhs. Since there is, one second. Since there is no preference capital. If preference capital is also there, total is 25 means you have to minus preference. That left out is called equity share capital. But total worth of the company is total of asset. If you minus the external liability, the liability means in our example, long-term liability as well as current liability. If you minus the two, you will get the net worth. That should be equal to 25 lakhs plus 7 lakh 40,000, 32 lakhs 40,000. It should be equal. That's called net worth. Preparation of this is not that big deal and it is not going to help you anymore in your real life. Preparation somebody will do. What you have to understand as an executive, how to read this, how to take some information from this. Net worth, mainly net worth. Net worth is nothing but book value of owner's claim in the business. What is the book value? Balance sheet value. What is the owner's claim? Share capital plus reserves and surplus. Share capital means what they given in the beginning. Reserves and surplus means what the company has created for them so far and not given to them. It is still in the company only. That's called net worth. So net worth keeps on increasing means the company is doing good. People may try to buy that company's equity share. One of the criteria, not one and only criteria. You should not see in isolation one criteria and take a decision. You have to take so many other parameters as well in combination. Okay, something you're asking, sir? You got it. Okay. Anything else? Okay, so this is the profit and loss account and balance sheet of a company. I hope you will read more on this in this document, as well as you have to work out a few more questions in the similar line from this document as well as from any other document of same nature. Don't refer for this particular unit any textbook, because they may not be having this format. 2013, this format has come. Okay, now 10 years over, almost 9-10 years over, but many of the textbooks have not updated. Where I have taken this? I have taken it from Institute of Chartered Accountant of India, because they update every now and then, because they only suggest this one to have in the act also. Okay, so you take from ICAI or ICWAI or ICSI, Institute of Company Secretaries of India. Only India, please. And again, you all very global student. Okay, so you all go and refer from Google companies balance sheet. No, only India, Indian companies at Indian companies only. First to be Indian, then you can go for global. So Indian Companies Act. If any textbook is having this format, you can refer that also. Otherwise, these 3 websites. Clear to you? Any doubt? Those are online. We are going to wind up. Before winding up, anybody would like to say except thanks? Any doubt? Anything to ask?
No, no.
Anything to say? Everything is okay?
Yes, sir.
Fine, no problem. No problem. So keep reading the same document as well as similar document. If you have any doubt, please. Thank you. See you
Okay.
again in the next class.
Thank you, sir.
Thank you, sir.
Thank
Thank
you. See you.
Thank you. Bye.
I am winding up. Thank you so much.